Hello and welcome to the weekly outlook. We've got a few data points on the calendar next week, but unfortunately, there's nothing that's really going to be that market moving unless the data surprises. Now, the one that I have got particular interest in is straight away on Monday morning at 12:50 a.m. We've got the prelim GDP quarter on quarter coming from Japan, which is expected to come in at minus 0.5. Now, if we go and have a look at the US dollar Japanese yen, we've still got a situation where we've got divergence between these two banks. We've got one central bank which is about to raise interest rates, i.e. the Fed, and we've got the Japanese yen, or the Bank of Japan, which is in quantitative easing at the moment. Now they keep saying that their economy is on track. It's improving slowly. Um, and there hasn't been much talk of any. And they also stated that they were happy with the current monetary stimulus, and they weren't looking to increase it. However, if GDP and data keep slipping in Japan, then they are going to have to start increasing their quantitative easing program by adding more stimulus to the economy. And if that's the case, then the US dollar yen should rally. Now, it has been getting stuck on this 125 area of late and keeps pushing back down. But each time it pushes back down, as you can see on the 4-hour chart here, it's been making slightly higher lows. Okay, so we are in a bit of an uptrend here. And if we take it down to the daily chart, let's just see what's going on the daily. You can see we've had the falling wedge there, which it's broken out of. And we have actually got a target for the falling wedge, or we've got, sorry, this ABC pattern here. So we've got A, B, C, gives us a target of 12735. So the question is how do we get into this trade? Well, because the Japanese yen is also used as a safe haven currency when there's problems in the market, then the Japanese yen tends to buy up. And one of those problems could be that the Fed pushed their rate hike back. Now, we have got the FOMC meeting on Wednesday, but that really is just going to be a reiteration of the last Fed statement. So don't think there's going to be anything particularly new in there. And really what we're looking for the Fed to raise interest rates is going to be the non-farm payroll at the beginning of September. That's going to be the crucial data point that we're waiting for. So in the meantime, we need this to fall down low enough that we can assume a buy position. But with it being fairly close to that 125 level, it's not as easy as that. So let's put some trend lines on there, and we'll see how it's trending up, or since it's broken out of this declining wedge. Let's put a trend line on here and see what the norm is. And we've got these points here where it's pushing back to and in fact, I'm just going to put the daily moving averages on there as well, just on this occasion. Just want to see what's going on a closer. Okay, on a closer situation. So let's put the 200. Let's put the 100, and let's put the 50 DMA on. DMA daily moving average, so all it is a moving average on a daily chart. And the 50. Okay, so we can see that it seems to be using the 100 DMA here as a point of support. But we have, as you can see now, we've got the 50 DMAs crossed over the 100, the 100's crossed over the 200. These DMAs are clearly facing in the upward trend there. After we've had this wedge push back here, we're now looking to trend back in the upside direction. So really, I think what we're going to have to do is keep an eye out on the current price at the moment, but I would say the earliest I would like to try and get into this is probably going to be 124. We can see here we've got a pin bar rejection on the 4 hour. We've had a 50% pullback on that, and now it has started to make the leg up. So really, that was probably the best entry point at this current time. Even on the bigger time scale, if we look at the daily, you can see we've got the same sort of situation there. We've got this buyers coming back into the market, bit of indecision there, push down, and then it hasn't really closed higher yet. But I would probably go for this trend line, which is around about 123.90, 124 for a buy. It's going to obviously that Japanese data on Monday morning needs to come out slightly weaker than expected, and that should help cause this to rally up. It might be that we get a rally early in the morning and then it pulls back later on. So I'll keep an eye on that, but it's in focus anyway. We've got the Australian dollar monetary policy meeting at 2:30 on Tuesday morning. Now again, I'm not really expecting this to surprise the market. We've already had the RBA rate statement when they kept rates on hold, and they were fairly neutral in their outlook. The only thing I'll be looking forward to see if there's any changes in that. If they've gone more dovish or if they've gone more hawkish, then that's going to cause the Aussie dollar to rally, to move. But at the moment we're still bearish on the Aussie against the US dollar, although it could rally against some of the weaker currencies such as the euro or the Japanese yen if they are more hawkish. Now, I don't really expect them to be any more hawkish than before. I expect them to be fairly neutral, which means that monetary policy statement could really be a non-market mover. But again, it's going to be dependent on what they say. But I would look to buy, if they're hawkish, I would look to buy the Australian dollar against weaker currencies, and I would look to sell it against stronger currencies after the rally. Okay, so say for instance, if the Australian dollar, US dollar rallies on them being quite hawkish, then I would look to sell around about the 7.5 area, depending on how hawkish they are. But if they're hawkish, then I would look to buy the Aussie dollar, Japanese yen straight away, and I would also look to maybe sell the euro, Australian dollar straight away as well. This one's fairly quite high up again now on the trend, so this would be an opportune sell. We are just coming down to previous area of confluence and support there, so we're going to have to wait to see what happens on that monetary policy. CPI on the pound. Now this is important, but it's only important if the data changes. If it comes in weaker, then the pound's going to sell off. If it comes in stronger, then the pound's going to rally. Now CPI data can be a little bit over people that look to them too much for market movers. Generally, if there's no change, then the market doesn't move. It's only if the data surprises. So we're kind of on one of those weeks where if the data really needs to surprise for us to get anything happening, if the pound the CPI data comes in above 0.0, then we will see the pound rally, and we can expect it to pull back up to these 158 levels against the US dollar. Again, if it drops, then we can probably expect it to sell off, and I should imagine it will probably sell off quite a bit, because we've come to a point where we were very, very close to what they called Super Thursday last week, where we thought we were really going to get that rally on the pound with the split MPC votes for the MPC members to vote for a rate decision, and only one of them descended into voting for an immediate rate hike, where the market was expecting two. So that was the first sign that things had kind of come to a bit of a head in hawkishness, and then we had the weighted average hourly earnings, which dropped off slightly. So if the CPI does drop, now Mark Carney did say that he expected it to stay low for the remainder of the year, so it's very possible that it could drop below zero again. Now if that's the case, then we are going to see that pound sell off, and I should imagine it will probably sell off back down to these lower boundaries that it's been at before, around about the 146 area. It will make a great opportunity for us to buy it back, because no matter what happens, CPI will rise in 2016, and so will interest rates. So it will give us an opportunity to buy that back. But on the low CPI data, if it comes in lower, then we can expect the pound to sell off. Now, again, that's the same sort of situation when it comes against the weaker currencies such as the Australian dollar, the New Zealand dollar. If we do get a big sell-off on the pound, it will be a great opportunity for us to trade those on the sentiment of that sell-off, because these are very fast-moving currencies. So the pound, Australian dollar, for instance, if the CPI comes in worse than expected, we could expect this to sell off quite dramatically down to sort of 20.04. If it comes in better than expected, then I would expect this to rally again quite hard back up to the 2-1 area and start to make new highs. If it remains the same, then I wouldn't expect market movement at all. Okay, so we're going to be trading out of that event really on the basis of the data. Now there, it's early in the week, that's all happening. We've got CPI on Wednesday as well on the US dollar. Again, the same sort of situation. The CPI data isn't as important for the US dollar as it is for the pound. They're more concerned about employment at the moment and the labour market when it comes to their interest rates. So I don't really expect this to be a market mover, and I don't really expect to trade into that at all. The FOMC meeting, again, I'm expecting that to be a sort of a reiteration of their rate statement the other day. Not expecting much of a change in the market for that one this time round. I think we're more likely to see, again, NFP is going to be, the non-farm payroll is going to be the big one this week. We've got some Canadian data towards the end of the week, which will be interesting. We've got core CPI. Now, we're going to have to see, we've still got falling oil prices at the moment, so if CPI data comes in worse than expected for the Canadian, then we can expect to see that sell off as well. And depending on how the data's come out on the US dollar that week, we can probably expect to see this rally again. Now, we are looking for a much bigger pullback. We have been awaiting a much bigger pullback on the US dollar CAD. Now, if we get a better CPI data from the Canadian dollar, then that could also instigate the pullback that we're looking forward to, that 50% level, the 1.26639. Okay, so that could be a good point for us to start on that. However, if it doesn't come in quite so good, then we can probably expect it to rally from where it is at the moment. Okay, so we're really looking to trade out of all the data points this week. There's nothing really that we can trade into because the data's a little bit uncertain. It's kind of very borderline at the moment to what's going to happen, especially with the CPI on the pound, and all the other data points are really not expected to be that market moving. Okay, thanks for watching, and hopefully you can make some pips.